Hi guys, this is your Freedom Trader Collins FT. So today I'm gonna teach you guys about how to use the market structure. As you can see, my charts are very clean, very clean. There are no indicators. You can only see the moving average. That's it, colors. So what I do is I use the market structure and candlesticks and the price action. That's it. Nothing else apart from that. So today we're gonna look at market structures, how they do form. This is an example. I'm just gonna give you a quick example starting from here. For me, I use the word literally market structure. So when you zoom in or say you zoom out like this, what you see here is the market structure. It's actually another name for it. The way I call it is the double bottom and the double tops. So for me, why I call it market structure, because it actually, as you can see, for example, this one, it actually forms an M. And usually when it forms like this, there are two scenarios here. Always it happens. There are two scenarios here. When it forms like this and it's at this level, there are two scenarios that can happen. So first thing you do is, when this first section forms, the first thing you do is you put your neckline, because the next movements are going to be determined by the neckline. This is your neckline. So when the market goes up and comes down here, so what you, at this level, what you have to know is, if it didn't break down, if it reaches here, if market reaches here, next thing you have to be looking at is a buy signal. Because always when it reaches here, it goes up, then comes down. It's always like that. So whenever you find a buy signal, here, when you zoom, you'll find a buy signal and a reversal also, because actually this is a downtrend. This is a downtrend already. But me, when I'm looking at the bigger picture, you see, when I zoom out like this, I just look at the bigger picture. I look at the structure and price action. So now, most importantly, it's the structure. So when I look at the structure and the market was, say, still at this level down here, then I know it's time for me to start looking for a buy. And it's also a down trend. So next thing I'm going to look for is a reversal signal and a buy signal. So when you zoom in now, what do you see? Exactly what you see is a buy signal here and a reversal. Where is it? The buy signal, let's get rid of it. This is the buy signal. You see it is at the end of my arrow. It's this big bullish momentum here. It's this big bullish momentum here. It's this big bullish momentum. These two candles. So this is always a reversal. We're going to talk about this later on. When you see these two, no matter where you see them, you have to take action. You have to look further. So when you saw something like this, someone like me who sees it at the bigger picture, when I see something like this, where I obviously have to put my stop loss, my take profits, because here I just buy. I buy without even putting a stop loss. Trust me, when I see something like this, I buy without even putting a stop loss. So first thing I do is I draw my key level, which is actually my take profit. This is exactly what I do. So when I see a big bullish momentum candle here, so after the structure, I go to the candles. I look at these candles. I know whatsoever happens, the market must hit this level. So I buy here and I chill. Whatever it's doing, because there's no way it's gonna just after this one, then it comes back and continue. No, unless this was the end of another candle. Yeah, this could only happen if there was one candle formation, if there was one candle formation like this. I hope you guys you see it clearly. Let's make it bigger. So if okay, you could be worried if it was something like this, then you would have been trying to look at what we're gonna look at here. So since it was not like this, it was actually a trend here. So you don't, and this one was not there. So what you do is you expect a buy at this level, because this is what the market has done. It has gone up, comes down. Obviously you are looking for a buy, and this is your first TP. When you get out here, there are two things also. You put the second TP, but here you don't buy, you don't do anything. Yeah, you don't do anything. What you do is you are waiting for the market to reach here and perform. Whatever drama the market is making here, it's none of your business. What you're waiting for is another signal, which is a sell signal, because as it went up like this, it doesn't just go up and it continuously go up. As you can see now, actually what we can see now is the double bottom structure. Not not really clear, but it's something. So at this point now, when the market goes up and reaches this point, so if we call this a double bottom, already we can call it a double bottom if it has reaches, or if it reaches this point. So what we do now is, at this level, you actually cannot tell what the market is going to do, but what you can definitely say is, even if it's a double bottom and it's going to go up, it's not going to just continuously go up straight like that without reversing and kicking off. So at this point, you start looking, when you take your first take profit here, you can still judge from your take profit from this area. Now you look at the candles again at this area, if there was a reason to continuously buy here. So let's remove this one so that it should be clear. So say you took your first take profit here, then what are you looking for? You're looking for momentum. At this area, you're always looking for momentum. Momentum means the volume, the amount of people willing to buy. Are they more than seller? So the bulls against the bears. So here you can see the momentum here was high. Though you definitely took your profit at this point. Yeah, this is where you actually took your profit. You hit your profit here after after buying after buying at this point. You took your profit here. So when you take your profit, you chill. You don't just start uh, re-entering. But instead of this level, this was a very good signal here to tell you that it's gonna continuously buy. So this is another good signal here. The this one, this candle, this particular candle here, it's called the bullish engulfing candle. So this actually indicates that the market was selling, but there were so many buyers that it took the market, it took price right from this area and crossed the opening price of the previous day and went up and created a new high. So at this level, you kind of like very confident because here you took your profit, but you don't know if the market is going to continuously reach the top. So you don't know if the market is going to continuously reach the top here because this is your TP2. So what you do is here when you take your profit, you still observing how the market is going to react. So you took your profit, what did the market do? It came back. Even though it's coming back, you already have it in mind that it's going to form this market structure. It's going to form this structure double top. So what you know is even though it reached here and it's showing signals of coming back, it's still going to continue and hit this level. So now you continuously look for buying opportunities, and you don't just buy because you think. So when you find a signal like this one, you buy. This is when you enter. Yeah, you enter here. Then as you enter here, this is a very big trade and a good trade because you know whatsoever the situation, it's gonna hit this level. Sometimes it doesn't reach uh, right up here. Sometimes it will just reach mostly at this level. It will just reach here. So when it reaches here, same thing. You still chill and you look for sales. So this time around, it was very high. The volume, the buyers were really more than sellers. So it actually hit the top, crossed, which is another good sign that the market is going to go up. So it crossed, came back. Now it's coming back to confirm the M I was talking about. So at this point now, it came back and confirmed the M I was talking about. So what you're doing is you can sell here if you can see a sell signal. So you now look for a sell signal at this area up here. When it hits, whatever market hits your key level, you look for a buy or a sell signal. It depends on which one. Was it the resistance or was it the support? So at this point, it was a resistance. So you look at any sell signal. How did the market, how did price react to this resistance when it broke? Because it's a resistance. When it breaks up the resistance become a support. So how did price react when it hits the support? So it actually hit the support. It didn't reject, it broke, but the buyers were still continuing. The buyers still continue to struggle to buy, but at the end it came down. So when it's coming down just to fulfill this structure. So this is it for the market structure. A double. We can see a double bottom. Yeah, market came down, went up, came down, went up. So if you remove this one also, it can continue. It's till infinity. It can continue like that throughout. Okay, so at this point now, let's say you met the market at this level, but what you are thinking is maybe it's gonna hit here, because most often it will hit, break here before going up, before going up. But this time around it didn't. Why? Because uh, there was already an uptrend. There was already an uptrend formation here. The double bottom here didn't form also as usual. It did form like an uptrend. So already you would have started your trend here. Yeah, you would have started your trend at this point and expecting the market to hit. If it doesn't hit, you don't do anything, because anything can happen here. It might show signs of going up, but so what makes you understand that the market is gonna go right up? If it doesn't hit here, and if it breaks this level, because now this is our resistance, this is our new resistance. So whatever you are doing, you know that if the market breaks this level, yeah, let's say you know that if the market breaks this level, the next place you're going to try to take your profit is this level, because this is a good determinant. This M is all about that. It is to tell you, hey, if the market breaks above here, then it's gonna reach here. If it breaks below here, if the market breaks this neckline and breaks this bottom level and breaks this last support, then this is where you'll be taking your profit. Yeah, this is where you'll be taking your profit. So you have to get this in mind before you even start analyzing, before you even take your trade. You already have an idea. You don't go into the market saying it's going to buy or it's going to sell. No, you go into the market checking for which opportunity the market gives you. Is it a buy opportunity or a sell opportunity? uh, 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 um, Indicators do not determine that. Trust me, guys, indicators will not determine that. Price action will do, market structure will do, fundamentals will do. Fundamentals will just act for that time, and that's it. But this structure, it remains. Technical analysis will do also, and then your emotions, if you are capable of believing that this, when it happens like this, it's going to happen like this. So within this time, so many events were occurring. As you can see, this is almost about this is from September 2017 to April 2018. So you imagine the amount of events that have occurred uh, within this time, because this is where we are working. We are working within this. Sorry, guys. So this is our jurisdiction. So this is our jurisdiction for now. So if the market did break down, if the market did come and break down here, reaches here, broke it, this will be your first take profit. You observe how the market is going to behave. This will be your first take profit. You observe how the market is going to behave here. If it breaks again with a bearish momentum, then this is the next place you'll be expecting the market to reach. So that is how this market structure works. So here there is nothing, no events is gonna be an issue. Within this time, there will be events. They will only push the market right down, or they will push it a little bit up, but continuously the market will still go down where it's supposed to go. So since it didn't hit here, it didn't even reach here at all, what we now do is we know that if it breaks here, then we're going to be looking at our next key level, knowing that hey, the market is going to reach here. So what happened is actually it broke. Always look at how the market breaks resistance or support, demand and supply. Always look at how the market breaks it. How did the market break it here? Always the momentum. How the market breaks it determines if it's going to go up, or it's going to continue, or it's going to reject. So here there was no rejection. So this is what I'm talking about, guys. These two candles are determinant because this is a key level. How did the market behave here? That is how you now read candlesticks. This is where you do read the candles. So there were two bullish momentums here saying, hey, it's gonna go far. But always when it breaks, it always has to rest. It doesn't just break and it goes unless there is a crazy event like the NFP. If there isn't the NFP or the FOMC, then markets can go crazy. But if there are no events like those, always when it breaks, it breathes. It doesn't just go up like that. So it will come back, retest. Sometimes it will retest and break, but already you have it in mind that since it broke, it's gonna go up. But you don't never ever buy at this level, guys. Never ever buy at this level because you saw this candle, it broke, then you buy. No, you don't do that. You never buy at the high. This level is not, you don't buy when the market is high, though it's showing that okay, you this is good, the market is going to continue to that direction, but it's not a buy signal. So buying is when the market is down and the price is low. That is when you buy. So it they indicated here that its price is going to go up. But what you then do is you wait for price to retest, come down, then you start looking for a buy signal. Obviously, someone would want to buy here. A lot of people did buy here for sure. But when you are buying here, seeing this bearish momentum, and also how the market did break this one coming down, should be very careful when you are buying. So you could buy because of this bullish engulfing, but it's not a full complete bullish engulfing. As you can see, the body is half full, meaning it's not really complete, though it actually is it's a good indication that the market is about to start buying, but it's not really full and complete, and it's not a good reversal signal. So good reversal signal is always double bottoms of candles. So candles sticks double bottom are always good reversal of good reversal signals. So this is a downtrend. You saw one here. This also is a good one. It's better than this one. So this one here is a good one. There are no crazy candles like this here. So you can then buy here, knowing that your first take profit is this support. It's still there until it breaks completely, then you can remove it. I mean, this is the resistance. Yeah. So you bought here, you took your first profit, still another indication. This one still is another indication. But as I said, you don't buy just immediately above the resistance. You don't buy there. You buy at support and then you sell at resistance. So when it breaks like that, it gives you indication that there are more buyers. But you wait for markets to return, retest, and give you a buy signal, then you buy. So this was not actually here, was not actually a clear buy signal. You should be doubting. So you'll be asking me, so what's the use of the moving average? You see, so for long that I've been talking, it has been market structure and candlesticks also. So that is how I do trade, and the key levels, demand and supply. That is the actual economics of the market. You don't depend on stuff that people create to make money out of it. Meanwhile, the actual market is there. It's about people. It's not Bitcoin. It's people. It's real economy with governments. That's why decisions that are being made in American economy, you actually see them on your trades. You see action live going on. So it's not Bitcoin. It's real life economy. So this one is not a very clear reversal signal. So people will be doubting, still be doubting here. Buyers will still be doubting. But this one was a good one. So you see how it broke the the the, the moving average, though it didn't continue. But as I said, double bottoms are always the best reversal candle. When you see this one with this one, you see there is something similar. Yeah, there is something similar. You see this bullish, it did cross the bearish candle. Same thing here, and with the high momentum, given that there was another one here. So this is a good reason for you to buy. So when you buy here, you'll still be expecting to take your profit at this level. The only reason that could make you change your mind here, the only reason that could make you change your mind here is how price did react also at this level. So it did break, came back, it didn't behave well. It did break again, came back, but this time around it didn't come down. As you can see how the market behaved at this level, it's not the same like here. So here it rejected, here it broke the moving average, here it rejected the moving average, here it did break the moving average and continued down, but here it even started rejecting it right here. When you took your first profit here, it came down, it rejected, it actually broke but rejected and closed right up here. This is already a very good indication that price is not going to behave like here. It didn't cross below the moving average, it remained above the moving average. So price closed above the moving average. As you can see, it's the same thing here. Here it closed below the moving average, went up, hit, closed below the moving average. Even when you bought here, it went up, came and closed below the moving average. Here now, it went up, hit the resistance, came back and rejected the moving average and closed above the moving average. So this is a good uh, indication and confirmation that okay, now what you knew already from here, that when price breaks this level, it's gonna hit here, it now comes into fruition, it now comes into reality. Yeah, where are we? It now comes into reality. So right now when it rejected here, you know that okay, now price is going up. There is no way, it's not coming back anymore. It's not breaking back. Now you took your profit here, you can then re-enter here with this rejection and also a hammer. This is another good example. This is another good candlestick signal confirmation, and also it confirms you can execute your trade. So this one was a very good one here. So from here now, you just enter, you're very confident. Whatsoever price does, you keep your stop loss. You keep your stop loss below here. This is the safest stop loss ever you can keep. Keep your stop loss below there, and that's it. You can then put your profits, your TP right up here, or you put your first TP at this point. So you see guys, it's see how it works. So you put your first TP here, you observe how markets behave here. So this is how you use the moving average to live or to remain in the market. So it hits here, comes back, it doesn't break the moving average, it doesn't even touch the moving average, it continues. So this was your second TP. Remember this line, it's right from where we said that if price broke this area, this will be the next one. So this is how it happened. So you see, that is how it happens, guys. So it came here, even if you left your TP here, it didn't touch. But at this point already, guys, it's good. Unless you were not, you left, when you left the chart, you were not around or whatsoever. But this is a good time for you to get out. It's about one, let's see how many pips that is. It's about 400 pips, guys. So 400 pips, that is huge. So it comes back. You now, you see, it's still there. This resistance, it's still there, still behaving. Now we can then see immediately here, what do you see? You see another double bottom, you see another market structure forming, and that's it. You see the same thing again, it continues, the same cycle continues. So that's it for market structure, guys. And this is a very long video, but I hope it made some sense concerning market structure. No indications, no indicators, no crazy stuff, just price action, key levels, market structure. That's it. Thank you, guys.